11th Standard Accountancy, Chapter-3, Illustration-6. Jayasili is a sole proprietor having a provision store. Following are the transactions during the month of January 2018. Journalize them. Let's read the transaction. That is January 1, commenced business with cash. 2, deposited cash with the bank. 3, purchased goods by paying cash. 4, purchased goods from Lipton and Co on credit. 5, sold goods to Joy and received cash. 6, paid salaries by cash. 7, paid Lipton and Co by check for the purchases made on 4th January. 8, bought furniture by cash. 9, paid electricity charges by cash. 10, bank paid insurance premium as per the standing instructions. So listen carefully. Jayasili is the owner of the provision store. So in the month of January, she made some transaction. So the transactions is given here. So what we have to do? We are going to pause the journal entry for the given transaction. Before that, we are going to write the heading and format of the journal entry. So whose book is this? This is Jayasili's book. So we have to write the heading is in the books of Jayasili, journal entries. Journal entry format contains 5 columns, that is date, particulars, LF, debit rupees and credit rupees. Let's go for the transaction to pause the journal entry. The first transaction is January 1, commenced business with the cash 80,000 rupees. Commenced business means started business. Okay, so Jayasili started business with the cash 80,000 rupees. So whenever you started business with the cash account increases. Whenever cash account increases, cash goes to asset account. Asset account increases. Okay, so whenever asset account increases, it is to be debited. So dated on date column, we have to enter the given date, that is January 1, 2018. What they given in the question, we have to enter here, and in particular column you have to enter cash account debtor, because you commenced business with the cash means cash account increases, cash comes into your business. So your cash account increases. Cash account increases means your asset account is to be increases. Whenever asset account increases, it is to be debited. So cash account is to be debited. Cash account debtor 80,000 rupees. What are the accounts are affected here? Capital account and cash account. Then let's go for capital account. To Jayasili's capital account. Jayasili invested 80,000 rupees to start the business. Investment means capital. Okay, what is meant by capital? Money or money's worth which is invested by the owner of the business. Okay, that is called capital. So whenever capital account increases, it is to be credited. Okay, so Jayasili's capital account is to be credited. So to Jayasili's capital account 80,000 rupees. The narration is, you must write the narration. Okay, you don't omit it. You can write the narration on your own words. Otherwise, you can copy the narration from the head, from the given transaction. Okay, so Jayasili commenced business with the cash. Okay, next transaction is January 2, deposited cash with the bank 40,000 rupees. What are the accounts are affected here? Cash account and bank account. 2 accounts are involved here. That is, one is cash and another one is bank. Listen carefully. Both cash and bank, both are comes under the asset account. When you have a cash in your hand, 40,000 rupees cash. You have 40,000 rupees cash in your hand. Okay, so that cash you have to deposit it into your bank account, because cash and bank both are comes under the asset account. So your cash 40,000 rupees you deposited into your bank account. So your bank account increases. Whenever your bank account increases, asset account increases. Whenever asset account increases, it is to be debited. So bank account is to be debited. So dated on 2, bank account debtor. Bank account is to be debited because asset account increases. Bank account debtor 40,000 rupees to cash account. Why? Because you deposited cash. So your cash goes out from your business. Okay. So whenever cash goes out from your business, your asset account decreased. Whenever asset account decreases, it is to be credited. So cash account is to be credited to cash account 40,000 rupees. The narration is deposited cash into bank. On 3rd January, purchased goods by paying cash 5,000 rupees. What are the accounts are affected here? Purchased goods means you have to use the term purchases account and cash account. Two accounts are involved here. One is purchases account and another one is cash account. Whenever you purchased goods, it is an expenses. All the expenses is to be debited. As for the format, purchases account is to be debited. So purchases account at 5,000 rupees. When you made purchases through cash, okay, so when you purchased goods through cash, so your cash account decreases. Whenever your cash account decreases, it is to be credited because cash account comes under the asset account. So your asset account also decreases. Whenever asset account decreases, it is to be credited. So to cash account 5,000 rupees, cash account credited. Okay. The narration is goods purchased by cash. The next transaction is on 4th January, purchased goods from Lipton & Co. on credit rupees 10,000 rupees. Purchased goods means what terms we have to use? Purchased goods means you have to use the term purchases. So purchased goods means expenses. Whenever you made expenses, all the expenses used to be debited. So purchases account on 4th January, expenses account is to be debited. That means purchases account at 10,000 rupees. How you made purchases on credit basis? You purchased goods from Lipton on credit basis. Lipton is your creditor. You are the liability for 10,000 rupees. Okay. So whenever your liability increases, it is to be credited. So Lipton & Co. is your creditor. He is to be credited. So to Lipton & Co. account 10,000 rupees is to be credited. Goods purchased on credit. Then sold goods to Joy on 5th January, sold goods to Joy and received cash 11,000 rupees. That means sold goods for cash. Okay. Whenever you generate sales in your company, your revenue account increased. Your income increased through sales. Okay. Whenever your revenue account increases, it is to be credited. So whenever you made sales, you received cash, right? So your cash account increased. 11,000 rupees cash account increased through sales. So whenever cash account increases, your asset account also increases. Whenever asset account increases, it is to be debited. So cash is the receiver. So cash account at 11,000 rupees debited. And to sales account, because whenever you generate sales, your revenue account increases. Whenever revenue account increases, it is to be credited. So sales account 11,000 rupees is to be credited. Narration is cash sales made. The next transaction is paid salary by cash 5,000 rupees. Paid salary means expenses. Okay. You made expenses through cash. What are the accounts are affected here? Salary account and cash account. Two accounts are involved here. When you paid salary means expenses. All the expenses is to be debited. So salary account is to be debited. Salary account at 5,000 rupees. When you paid salary by cash, so your cash account decreases. Whenever cash account decreases, cash account goes under asset account. So asset account decreases. Whenever asset account decreases, it is to be credited. So cash account is to be credited. So listen, cash is the giver. So cash account is to be credited. Credit the giver. Okay. Then next transaction is 7. Paid Lipton & Co. by check for the purchases made on 4th January. So you made purchases on 4th January from Lipton on credit basis. Okay. Now on 7th January you paid 10,000 rupees to Lipton. So your liability account decreases. So whenever liability account decreases, Lipton and Co is to be debited. Okay. So liability account decreases, it is to be debited. So Lipton account debtor 10,000 rupees. How you made payment? Through check. Check means bank. So whenever you made payment through bank, your bank account decreases. So whenever your bank account decreases, asset account also decreases. Whenever asset account decreases, it is to be credited. So bank account is to be credited. Bank is the giver. Credit the giver to bank account. Lipton and Co is the receiver. Debit the receiver. Lipton and Co account at 10,000 rupees to bank account 10,000 rupees. Narration is payment made by check. Then bought furniture by cash 4,000 rupees. Bought furniture means asset. You purchased asset by cash. Whenever you made purchases asset, you have to enter the name of the asset. So you bought asset means your expenses account increases. Whenever your asset account expenses account increases, it is to be debited. So whenever you purchased asset, your asset account increases. Whenever asset account increases, it is to be debited. What are the accounts are involved here? Furniture account and cash account. Furniture is an asset. Asset account increases, so it is to be debited. So furniture account debtor 4,000 rupees. How can you make purchases by through cash? So your cash account decreases. Cash account comes under the asset account. Furniture account, cash account, both are comes under the asset account. So your asset account decreases. Whenever asset account decreases, it is to be credited. So cash account is to be credited to cash account. Cash is the giver, furniture is the receiver. So credit the giver, debit the receiver. Furniture bought for cash. Then paid electricity charges by cash 1,000 rupees. Paid electricity charges is an expenses account. All the expenses is to be debited. What are the accounts are involved here? Electricity charges and cash. Two accounts are involved here. So expenses is to be debited. So electricity charges is to be debited. So electricity charges account at 1,000 rupees. And when you paid electricity charges through cash, your cash account decreases. Cash is the giver. So credit the giver to cash account 1,000 rupees. Electricity charges paid. And bank paid insurance premium as per standing instruction 300 rupees. So sometimes bank paid directly instead of you as per the standing instruction. Like that here bank paid insurance premium instead of you directly. Okay, so insurance premium is the expenses. So all the expenses is to be debited. So insurance premium account debtor 300 rupees. So what are the accounts are involved here? Insurance premium account and bank account. Through bank you paid insurance premium. Okay, bank paid insurance premium only. Two accounts are involved here, bank account and insurance premium account. So insurance premium is the expenses. All the expenses used to be debited. Insurance premium account at 300 rupees and bank paid. So bank account is comes under the asset account. So whenever asset account decreases, it is to be credited. So bank account is to be credited. Bank is the giver. So credit the giver. So to bank account 300 rupees. Narration is insurance premium paid.